Hi there guys, hope you're all well. Welcome back to a new video. Today's video is going to be based on stop losses. Where should you place yours, the different ways you can manage your stop loss, and hopefully the examples that I do go over can benefit your trading. So I will be breaking down positions I have previously taken, and I will show you the different types of stop losses you could have used. For some people, you're going to understand exactly what I'm talking about and you may already do it. For some people, this may be brand new for you. So regardless, I hope you at least learned something from this video. So let's get on to the charts. So we are now on to the charts. I'm going to go over the two types of stop losses that you can have, and then we'll go over some trade examples of what you can do. Now, when it comes to stop losses, in my opinion, there are two types. The first one will be a mechanical stop loss. The second one will be a subjective. There are other words where you will be able to describe these types of stop losses, but I personally have decided to go with these two. Now, a mechanical stop loss is like a mechanical strategy. I would usually say that it is a fixed size stop loss. So if you are going into a trade, regardless of what it looks like, if it fits your plan, you are entering the trade with a stop loss of, let's say, 30 pips, because that's what I do. So this may be that you have backtested, you've journaled, and you have basically looked at your data and said, if I had a 30 pip stop loss on all of my trades, it would have been more beneficial than doing a subjective stop loss. It may be better than doing a 20 pip stop loss, and it may be better than doing a 40 pip stop loss. It can work that way. So for me, I have personally found for myself and the way that I and the community trade, I advise that the guys trade with a 30 pip stop loss. And obviously, if their data says different, then they can amend it. But for me, my data says that I use a fixed mechanical stop loss so that I don't have to overthink anything when my trade goes live. The second type of a stop loss is going to be a subjective one. That means it's most likely going to change trade by trade. You could still have a mechanical approach with that being, my stop loss is going to cover the high. That is still a mechanical rule, but the value of the stop loss in terms of pips obviously won't be. So if you are more of a price action trader, or even if you use limit orders like me and just have a different approach, you may have a lot of flexibility within your trading and what stop loss you decide to use. Personally, the issue with subjective stop losses for me is that, let's say you're backtesting and even journaling. This week, you may have taken a trade with a 10 pip stop loss. Next week, you could take the same trade with a 15. It's not consistent. And that's just what works for me. There are going to be some people out there that use subjective stop losses that change trade by trade and make that work. I am just saying from my experience, I have not been able to do that. Okay? It's more profitable for me to use a mechanical fixed stop loss with a statistical advantage over the course of 100 trades. So what I'm going to do now, I'm just going to go onto the charts and I'll break down a trade that I've taken with my fixed stop loss, and I'll also show how you could maybe use it in a subjective way. So I'm now on the charts. This is Euro Australian dollar. For some reason, it's on the 5-hour chart, not the 4-hour chart. But this is basically a trade that I took earlier on in the month. So my entry for this position was at 1.6295. Okay. My key level was up there at the 6320 area, but I entered on 62950. So this black line was my entry with a limit order. What I want to quickly do now is break down exactly how I took the trade and the two types of trades you could have taken. So with my limit order, my entry was here. Now on the first position, which is how I actively trade, I had a 30 pip stop loss, okay? Which means that my stop loss was there. My fixed TP1, where I usually take a partial, just due to the fact that the win rate is so high, usually will be around 1-to-1. So in 30 pips time, I can go break even, I can take some profit from the trade, and statistically, I can let the trade run, and that works really well for me. On the flip side, if I was using a mechanical stop loss, maybe I would say that a subjective stop loss, was that my entry is in exactly the same place. But let's have a look to the left and see. This level that's held as resistance here, 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 and obviously here is obviously great. However, if we were to be safe and say, you know what, I want to cover all the times that price has come to this level, you may end up with a stop loss above the highs up here at something like 72 pips. There are going to be some people watching that video that says, well, I won't put my stop loss there. This is just for an example, okay? I understand that the stop loss on the screen might not be one that replicated how you would personally do it, but obviously that's just the way it is, okay? It may well be that you want to cover your purple zone with a little bit of a buffer. Maybe you want to put a 40 pip stop loss and just cover it a little bit more. So there's a lot of subjectivity when it comes to this stop loss here because it's not based on any form of statistical edge. It's just based on what I personally think the trade needs to do. So let's just say I wanted to cover the highs here because I am basically saying every single time that price has hit this level, it has basically reacted no higher than there. That's a very wonky line, but you know what I mean. So let's see what happens with the trade. Trade comes into the area and tags you in, and then as you can see there, it obviously ended up doing that. And you see it melted off. Absolutely fine. So this is an example of if you were to try and target, one-to-one on this more subjective stop loss, you are waiting for 72 pips for price to be hit. With my statistical kind of mechanical stop loss, I hit TP within an hour or so on this trade, and it was easy as that. So that's something to keep in mind. I was in the trade a lot less amount of time, and also I got the same risk to reward. And to be honest with you guys, with these levels, not every level is going to give you, 50, 70, even 100 pips. 30 pips is usually the sweet spot before some form of pullback back up to entry. So that's just an example there. What we'll also do is break down one more and we'll see exactly. Now, here we are looking at Euro Australian dollar again. This was another position that I took at the start of the month. And this is basically what we were looking at. So my levels were set. I obviously had my levels drawn of where I thought price may react in the future. And this is basically what came from this trade. So I had an entry at this level here at the 1.6170. And of course, on one of my positions, I had my fixed stop loss of 30 pips. Okay. So this was position one. I think what happened with this position, I basically, and this is something which I did in a different video, is when I basically had my TP set based on the levels. I did a video, and there is going to be one coming on how to set your TPs. And this basically was a 3-to-1 TP fixed with no runner, just because every time price had hit this level, it at least went all the way up here. So I was happy to do so. Now, if we look at what some people may do when it comes to price action, is that if we look at this level, previously we had price pushed down here, previously had it pushed down there, and even here, you've got a little bit of structure there. So realistically, if we were looking at this just from a price action standpoint, again, just based on the 4-hour time frame, I know some people are going to say, well, I'd look for an inverted fair value gap on the 1-minute time frame. That's not how I trade around here, so unfortunately, I can't relate. 45 to 50 pip stop loss just based on the structure of the market. Obviously, it's a lot safer bet. And if you wanted to target up there, just like I have on the previous one, this is what you're looking at. So you've got a 3 risk to reward versus a 1.8 risk to reward. Obviously, the 3 is better. So this is based on, again, data, mechanical rules, and seeing it work over and over again. This isn't you just looking at a chart and saying, you know what, I hope that price basically comes into this area and works with a 20 pip stop loss. It's not that. This is saying if I've got 200 trades of data and I can see that the 30 pip stop loss works better, that is what I am going to do. So please don't mistake this and then go away and think, you know what, I'm going to use a 30 on everything. Unless you're trading the strategy that I trade and teach, then there's no point doing that. Get some data, look at it for yourself, and go from there. So I'm hopeful that this has kind of opened your eyes a little bit into how you can place your stop loss based on the market structure, but also a mechanical and fixed method. If you do have any questions, please just drop them in the comments below and I'll be happy to answer them. And as mentioned before, subscribe if you haven't already. 3 videos a week is what you can expect as a subscriber. And there is also the free Telegram in the description. So yeah, guys, I will see you in the next video.